Good morning, everyone. Welcome back to the Best Business Show. I'm super excited. Today we have a very special episode. Myself and Michael Saylor sitting down for a 2-hour in-person conversation. Michael and I recorded a podcast episode about a year ago, right after he announced that he was going to put a very material portion of his company's balance sheet into Bitcoin. And so maybe, Michael, we can start with kind of a 1-year update from when you actually decided to make that decision and how things have been going so far with MicroStrategy.
Sure. Well, if you roll the clock back to July, we had $500 million of capital in our treasury. We were holding short-dated treasury securities and generating effectively like 20 basis points of yield on it. We'd seen a K-shaped recovery. Wall Street came back with a vengeance. Main Street was flat on its back. And it was clear there's monetary inflation. So we decided that we were going to lose a large portion of the $500 million in purchasing power if we didn't do something. My forecast then was probably like 25% inflation. And you could have got there just by looking at the S&P index. So I thought, $500 million minus 25%, like losing $125 million in 12 months is kind of like losing money at 2 to 3x the rate that the 2,000 people in the company were making money. So we either needed to give the money back to the shareholders or we needed to invest it in something. So the thought was, well, if we're a Main Street company struggling against all the lockdowns with all the uncertainty, and we are doing it minus $500 million, it feels like a university giving up its endowment as it goes into a crisis, right? So that decapitalizing the company, it was a way to give the $500 million to shareholders. They would have put it in the S&P 500 and they would have got 34% on it. If we had done that. But we would have, in essence, left ourselves defenseless without any capital. So that was one strategy. The second was invest it all. I would have bought $500 million worth of Bitcoin if I was a private company. I just would have walked out, bought all $500 million. I would have done it at whatever, $10,000 a coin. But as a public company, you got to think about your outside shareholders. And you can't, it's not like there's 10. You can't just go to the 10 of them, ask them what they want to do and get their buy-in. When you're public, you've got a shifting set of outside shareholders that are changing every minute of the day when the stock market is open. So the way that you actually handle this is a bit more sophisticated. What we did is we transparently we telegraphed that we were looking at this. Our first press release was an announcement that we were going to buy back $250 million worth of our stock over the course of 12 months. And we were going to invest $250 million of our capital in hard assets. And we said, we're looking at everything under the sun, and Bitcoin was one of the things. So my first love of the Bitcoin community was, the way that I knew I liked all the Bitcoiners was one day later, some cyber hornet, some Bitcoiner goes, MicroStrategy is considering buying Bitcoin with $250 million. Now, as Bitcoin merged in there with gold, silver, commodities, equity, property, real estate, anything you could have imagined. But the Bitcoin community immediately picked up on that. I don't know how they do that, right? They must be scanning for this. Nobody else picked up on it. The stock was trading $120 a share. A week goes by. Literally, you announce you're going to spend $250 million and buy your stock back. You think it would move? Nope. Crickets. But the market had a week of notice. And then a week later, we stepped it up into the next gear, which is, okay, we're going to buy $250 million worth of Bitcoin. We made the decision. We're not splitting it across 6 assets, right? And it's a good thing we did, right? Because Bitcoin's up 332% in 12 months. Gold is down 7%. If we'd split it 50-50, 125 million of gold, 125 million of Bitcoin, right? It would have cost us billions. If we'd gone all gold, it would have cost us many, many, many billions. We'll come back to that in a second. So we had to do something, but the question is what? So we just picked Bitcoin. We made the decision, but we thought, this is going to be jarring for some people. Stock is around 122 at the time, right? To put this in perspective, the company's $500 million revenue generator, generating cash flow, and we have more than 500 million in cash and about 10 million shares. So the company's trading at 1 times revenue plus cash. Mm-hmm. We give back all the cash, the company trades at 1 times revenue, the stock goes to $60 a share. Right? So we're like 122, no one's really paying attention, but we said, well, maybe people think this is offensive, they're not going to like this, or it's too risky. How do you actually orange pill every one of your outside shareholders at the same time? Well, you can't. So the next best thing is we just offered to buy them out. So the idea is if you don't like this, we're going to buy you out. We're going to post $250 million to buy back shares at a premium. So we offered to do the buyback at up to $140 a share, which is, buyout premium. If you don't like it, then you sell your shares back to us at a profit. We wait 20 days. So the market trades for 20 days, and in the first week, the market's trading on 135. Like people, so they're not even quite sure about the buyout. Then after a while, they start thinking, they're like, well, if I can put it back to the company at 140, then presumably maybe it's worth more. So the stock trades up a bit past the 140. And at the end of the tender period, we have about $60 million worth of shares tendered. Everyone that didn't like the strategy had 20 days to sell into the open market. And if you sold in the open market above 140, then why wouldn't you? And if you're still holding the shares at the end of the tender period and you don't like the strategy, you sell into the tender. So the result of the Dutch auction is we had $175 million of extra capital. We thought about it. We put out another press release. Okay, this is our primary treasury reserve asset. So the first notch was, this is a treasury reserve asset. The second step is, this is the primary treasury reserve asset. Then we bought 175 million more Bitcoin. So at that point, we're up to 425 million. The first tranche is in the 11,500 range. That was a little bit difficult. It was more difficult to do the second tranche because Bitcoin traded down. We had a loss. It traded down to into the tens and even, you remember that. So the second tranche we bought at 10,000 something because we're committed, right? And if you go pull the Twitter stream, there's all sorts of interesting commentary on our strategy.
So you basically had done, let's call it up to that point, 425 million of a $500 million balance sheet. And you had rotated your shareholder base to people who were aligned with the strategy. And you had also planted the flag in the ground as the first publicly traded business in the United States to identify a treasury strategy that would leverage Bitcoin as the primary currency or the primary asset that you would use in your treasury. When you do all that, I know that there's been a whole bunch of conversations in the behind the curtain. I don't need names, but what are other fellow publicly traded companies, other finance executives, people on Wall Street at that point? Are they saying you're crazy? Are they, oh, wait, this is really interesting, tell me more about it, trying to learn? Like, what was the reaction after the first $425 million?
I think it was largely ignored by every other publicly traded company. I don't think there's a lot of awareness or to it. When we did our due diligence checks, we found Overstock 2 or 3 years ago had a few $1 million of Bitcoin on his balance sheet. And that's it, right? We couldn't find anybody else. And so this is off the beaten path, but it seemed like so rational to me. Like it seems so obvious. Bitcoin is digital gold. It's basically engineered to be digital gold. What do you need in a inflationary environment? You need something that's like gold, but better than gold. You have to make a choice. It was obvious that the institutions were coming, right? I mean, you had companies like Fidelity getting into this space. Just 6 months earlier or whatever. But the fact that we're institutional custodians was a big checkbox. Grayscale was doing good business at that time. So it struck me as being a rational thing to do, but no other public companies had done it. And it wasn't totally clear to me why, although at this point now it becomes clear, right, in hindsight. So we went through that. We did the 425 million. The stock traded up. Bitcoin started trading up. At that point, I started speaking in public, and you were the first person I spoke to.
I remember.
Right? and I learned most of what I knew about Bitcoin by scouring the internet and looking at your podcast and reading all of the stuff that was posted, right? And I tripped through all these different things. And one thing I knew from your podcast was you always ask a question, right? At the end, right? You're like, you can ask me a question, remember?
Correct.
Now you get to ask me the one question. So what I remembered about Pomp was he wants to know a book and he wants a question, or he gives me a question. So I'm like, gosh, what question am I going to ask Pomp? And how do you learn Bitcoin? You study Twitter and you study YouTube and you surf the web. So here's what I know. I know I get to ask you a question, and I know Jack Dorsey has Bitcoin in his bio. So the question is, how do we get Jack Dorsey to buy Bitcoin next?
Correct.
Right?
Correct.
And at that point, we're all alone as a publicly traded company, and people aren't quite sure if we're crazy. But what happens next is some bullish things, right? I mean, I thought that when Square bought Bitcoin, that was a seminal event, right? Because one data point is a question mark, but when you had the second data point, you can draw a line. Mm-hmm. And so that was a big day. When PayPal announced support for Bitcoin and they started moving it, that was a big day. That was a data point, right? Those were the data points that moved us from 10,000 to 12,000 a coin. And at some point, some Citron research studied, discovered my stock, and Andrew left, I guess, said something positive, and the stock started trading up, and then it traded into the high 100s, and then it traded into the 200s, and Bitcoin started trading up, and when we got into the teens, people thought, oh, well, there's something interesting here. So the next step in our journey was, like, in addition to me starting to communicate why we had done what we'd done, the next step in the journey was to go out and buy more Bitcoin. So we started buying more Bitcoin as part of the Treasury Reserve strategy, and that got people's attention. Then when the stock got to the 300 range, that was the highest it's been in a decade, 300. So we started thinking, well, maybe we can raise more money. And so we went back to the convert market, and we were trying to raise $400 million in a convertible debt offering, but it was extremely popular and we were oversubscribed. So we upsized the deal to $650 million. So that was a screaming home run. We had proposed a 32 to 37% premium. We priced it at the 37.5% premium, the high end of the spread. We'd proposed like 1.25% to 0.75% interest. We priced at the low end of the interest rate. So we raised $650 million at 75 basis points with a strike price of $398. The stock had not traded at $398 in a decade. Mm-hmm. So it seemed like reasonable. If you could sell $650 million of stock at $398 a share, it seemed like a reasonable thing to do at the time. So then we took that and we bought Bitcoin with that. So that was, we started out with we're going to raise the money for general corporate purposes, and along the way, the discussion was, what are you going to do with it? And I said, well, I want to be able to buy Bitcoin with it. And they said, well, we should put that, into the disclosure. I said, yeah, we should disclose that. And then they said, well, are you sure you're going to buy it? And I said, yeah. So eventually it flipped and it became, we're doing it to buy the Bitcoin. So that became, in the history of first, right? We're the first public company to buy Bitcoin on the balance sheet. We're the first public company to declare it a Treasury Reserve asset. We became the first public company to do a Dutch auction, which is in essence like an equity issuance to buy Bitcoin, right? It's like I'm either buying my equity back or I'm or issuing the equity. So the first Dutch auction, where the proceeds eventually became Bitcoin, then the first convertible bond to buy Bitcoin. And I think that all of those things rotated the shareholder base, right? I think the most important thing was to be long Bitcoin, right? So in essence, the first publicly traded company where the shareholder base is long Bitcoin. And it started out, my aspiration was, it'd be great if half of our enterprise value is based upon enterprise software and half is based upon the assets. Because before we did this, we got substantially no credit for the assets. Mm-hmm. Like people were basically taking the 500 million and they're like, okay, well, that's going to be worth zero, right? Or negative.
Because you were 1 times revenue plus just the cash on the balance sheet.
Yeah. Yeah. So if you've got a low growth cash cow, right, that's like being a dentist where you're going to make a lot of money every year for a decade and maybe you'll make 5% more each year for a decade. If you've got a low growth cash cow, but the money supply is debasing at 25% a year.
Kills you.
Right? It's like the road to serfdom is working exponentially harder for a currency getting exponentially weaker. What I saw was 2,000 people doing 100,000 things right every year to make $50 million and then watching the enterprise lose $100 million a year. Mm-hmm. Due to a political decision. So in essence, we're running as hard as we can. We're falling backwards. And the situation was literally hopeless, right? Like people wonder, where did the Bitcoiners' hope come from? Well, it just was hopeless, right? I mean, the operating business is hopeless and okay, you're going to work yourself to death for a decade and do a million things right with 2,000 people and you're going to be worse off in a decade than you are today. Okay, mm-hmm. That's operationally hopeless, right? And then on the balance sheet, if somebody says we're not even thinking about raising interest rates, it means for the next 4 years, you're going to get 0% on your money and is going to be worth half as much in 36 months as it is worth today. And the balance sheet is hopeless.
And this is all before we even see the persistently high inflation that we're seeing now, right? This was just from a market structure standpoint of this had been going on pre-COVID, got accelerated during COVID. You started to recognize this again last year. If you go back and you look at the inflation numbers in Q3, Q4, I mean, it was obvious that we were increasing or accelerating, but we weren't at 5% CPI for 3, 4, 5 months, right? Now is a much, much different situation. So at what point do you switch from this as purely a defensive like treasury strategy of we want to take the cash on our balance sheet and put it in an asset that we can protect ourselves, protect our purchasing power, to then it feels like you made the switch to go offensive. That first bond offering was an offensive move.
I think you called it right there. I think that it's a defensive strategy through the Dutch auction. We had to do the Dutch auction to provide a graceful transition for our shareholders to get long Bitcoin, right? You're either long Bitcoin or you're selling out to us at a premium, one or the other. And then from that point, Bitcoin started moving up and our stocks started moving up. And then we realized that like the conservative thing to do is just stop there. And if we'd stopped there, I mean, we would be all equity, $475 million invested at $11,000 a coin or something. And that's not a bad result, right? We would have made 6x our money. But what we realized is we could borrow money at 75 basis points. Bitcoin's up 171% a year every year for a decade, right? If you can borrow money at 1% and invest it at 171%, your arbitrage is 170% on how much? Well, how much do you want, right? Like, where are you going to stop that?
When you borrowed at the 75 basis points, I was impressed. But then you followed it up and you borrowed even more at a 0% interest rate, if I remember correctly. What was the second offering?
Because the first offering came out, the strike was 398. Bitcoin kept moving up. Our stock kept moving up. Eventually, that bond was the best performing bond of the entire year. Right, Anthony? what I'm saying is of every single corporate bond sold in the year 2020, every convert, every junk bond, everything sold, every municipal bond, whatever you could imagine, the single best performing bond was MicroStrategy convertible bond, where you could have doubled your money. At some point it was trading insane amounts, like triple, your money on a bond. Okay. So we had good success there. And of course, Bitcoin kept moving up and our stock kept moving up. And we realized by February that we could do another offering. The next offering was we came in the market offering $600 million. The first one we started with $400 million. This time we started with $600 million. But again, it was oversubscribed. We upsized it, exercised the green shoe. It became a $1,050 million offering. And the range was 50 basis points to zero. So we struck it at zero. And up 50, 37, I forget the number, but we ended up having a 50% premium or 47%. I forget exactly. It was a high premium. It was a low coupon. The strike price is $1,432 a share. So now put this in perspective. This is 10 times the price of the Dutch auction, some number of months earlier. Now, so why'd we do that? Well, because if you could borrow $1 billion at 0% interest and invest it in something going up 170% a year,
pretty good trade.
Why wouldn't you do it, right? Like every single business on earth that's debt financed presumably is borrowing money to invest in something which is going to return a higher yield than the cost of the debt. Now, I want to pause here and make one point. The reason that I was sensitive to inflation was I immediately saw the inflation in March and April in the stock market, right? Because my inflation bogey wasn't, if I were to go to all my investors and say, I got $500 million, I'm investing it at 2% interest and inflation rate's 1%, they wouldn't have given me a pat on the back. They would have said the S&P index is moving up 10% a year. Your hurdle rate, your cost of capital is not 1% or 2%, it's 10%. And maybe you're getting 5% yield on a piece of debt, then I don't hold my nose, but you're losing 5% a year. Half-life of the money is 12 years. Okay, fine, but like you shouldn't be holding it. You should be buying your stock back or buying another company with that. Sitting on that cash it doesn't make any sense. Saifedean says the dollar-weighted monetary inflation rate across all currencies for the last 30 years is 14%. Interesting number he comes up with. 14% is the inflation rate of the currencies. Now, that would be the inflation rate on scarce desirable assets or any portfolio of assets. And if I look at my screen right now, over the last 10 years, the S&P 500 is showing 14.15% interest, or 14.15% compounded annual growth rate. NASDAQ's up, 19%, gold is up 20 basis points, nothing. Bitcoin's up 170%, right? And long bonds give you like 2.5%. So the monetary inflation rate equals the S&P index. Well, the traditional way you'd value a stock is you would put a risk premium on it. And you would say, well, your cost of capital is the return plus the risk premium. So it used to be we'd think, well, there's a 3% risk premium and the inflation rate then would be 11%. But I think that if you buy the S&P index, you're kind of in theory stripping out the risk because you're buying 500 companies. So the S&P index can be viewed as a proxy for monetary inflation. And the question of inflation is, what's your inflation rate? Well, what do you need to buy? If you're a consumer, then your inflation rate might be CPI if you agree to buy what the Federal Reserve tells you should want, right? And the market basket of things in the CPI is what the government says you should want in your life. But they never included a Picasso or a jet or a yacht or a house in Miami Beach in that market basket.
a step even further than that is the number 14% is very interesting, because my understanding is if you go back, obviously CPI used to represent a cost of goods index. So what is literally the change of price of individual goods year over year over year, and that's how inflation was measured. Now, obviously, we have a cost of living